Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today, we're going to take a look at the top 10 cannabis stock news stories of the week. Starting with number 10, the rise of psychedelic stocks. There's two new IPOs that go head-to-head. The psychedelic industry is beginning to heat up, giving cannabis investors an eerie sense of deja vu. Psychedelic stocks are in high demand as Champion Brands and MindMed IPO in the same week. Number 9 on the list is that markets soar as the Dow posts the second best point gain ever. The Dow Jones soared 1,173 points as Joe Biden's Super Tuesday win sparks a major market rally. So as the market soared, North American pot stocks also rebounded sharply, with some posting double-digit gains on the day. These are essentially schizophrenic headlines. We've seen market crash the most on record, and then the very next day, the market increased the second most points going up. So for the same reason, I fully expect the market to have a lot of volatility going up and down, and there's a lot of money to be made trading those ups and downs. But for everyone else who's just buying and holding, waiting for some normalcy to kind of hit the markets, I think you're going to be waiting for a lot longer. I don't think that holding any of these individual equities is going to be a big gain or a winner for individual investors. I think trading during volatile times is absolutely a lucrative opportunity if you know what you're doing. If not, and you're an accredited investor, we do have an AI-based stock index that's doing a lot better than the competition, but that's a podcast for another day. Number 8 is that cannabis stock Tilray sinks on weak earnings report. So Tilray reported a net loss of $219 million on the quarter, or $2.14 a share. The net loss included a $112 million impairment charge related to its assets, as well as a $68 million inventory write-down. Wall Street's been anticipating a loss of 40 cents per share. Tilray has been very, very slow to gaining any kind of major corporate partner. They also have a CEO who doesn't know anything about cannabis whatsoever, and not even a commodity at that. So you could bring somebody in who's ran consumer product goods or who knows about commodities, but bringing somebody in who knows nothing about all of that has always been a disaster, in my opinion. So Brandon Kennedy running Tilray is a horrible decision. He will be ousted at some point, and there's nowhere that this stock could go except down, because there's nobody at the helm who knows what they're doing. If I'm wrong, leave a note in the comments. Let me know what you think. That's just my opinion. Number 7 is that MindMed becomes a psychedelic pharma company to go public. A lot of push on this. I think it's probably paid. I don't even think this is real news because they haven't done anything. I've been reading about this over and over every single week. I think there's a lot of good things that come out from psychedelics. In terms of being able to kind of reset the brain for depression, PTSD. There's a lot of opportunities for it, but having gone nowhere, it's gaining a lot of traction and basically just noise. Show me that this stock is an actual company that's going to generate revenue. Otherwise, it's just a simple R&D company that doesn't really deserve the publicity that it's getting. It's probably just because of the individuals who are behind it, the guy from Shark Tank. So we're just going to move on. Number 6, that the U.S. federal government hasn't legalized cannabis, and the real reason behind that is that the U.S. government loses $20 billion a year by keeping cannabis illegal, and yet by not allowing companies to write off regular businesses, it gives the U.S. federal government an opportunity to collect tax revenues in other ways. And so really this is all about money. So right now, all these cannabis companies have to send their cash in, and that's inundating the IRS, but nothing's going to change, not until there's a reason for that. So maybe that's going to be the legalization in Mexico, kind of giving that FOMO, really the federal government missing out on that tax revenue that they're seeing, not only every other state, but as well as Canada and eventually Mexico. So we'll probably federally legalize in a year or two after the election. If the economy hasn't picked up, they'll need a reason, monetary reason, to generate that revenue and legalize. So not anytime soon, but we're getting there. Number 5 is that Tilray has been slapped with the near $0 price target. So there's an analyst that's calling for their guidance as being aspirational. So GLJ Research is zeroing out Tilray price target in the wake of the cannabis company's fourth quarter earnings. So they maintain a sell rating and lower the price target for Tilray from $5 to $0, suggesting that the equity is essentially worthless. So that's exactly what I just said. This company has absolutely no hope of doing anything until they bring people in who understand the product. So there's been a lot of people who are talking about the cannabis industry, being unprofessional or just not ready for the real world. And yet these CEOs in place have no idea what the product is. You don't have to be culturally relevant. You need to understand commodities. You need to understand cannabis. And if you don't, you need to just run in and manage a company. Take a look at Tilray and see how well they're doing. Number 4 is a Beacon Securities slashes a price target on Acreage Holdings. So another downgrade, essentially, with fourth quarter results falling short for Acreage Holding, according to Beacon Securities analysts. And an update to clients, they kept a buy rating on shares for Acreage, but dropped its price target from $17 to $5 a share. So that's huge. They've had a lot of opportunities, but those opportunities haven't generated into as much profit as they've expected. And so with all of the write-offs and the lack of additional funding from their parent company is a huge reason why they're going to drop that 60-some%. Number 3, Curaleaf enters Colorado by acquiring Blue Kudo. So Curaleaf Holdings will acquire Blue Kudo, a Colorado-based producer of premium cannabis chocolates and gummies. Founded in 2011, Blue Kudo is one of Colorado's oldest and most experienced edible manufacturers. I would probably take a look to see if anyone from Blue Kudo used to work at Curaleaf, because they are very well known for paying way too much for companies that have not an arm's distance deal. So the $900 million acquisitions that Curaleaf has had in California and Oregon have been with previous employees or partners that were associated with Curaleaf. It wasn't an arm's length deal, and they will be sued for those. So I'd be very, very cautious about anything that they do in the future, because they're going to be sued. It's just a matter of time. Number 2, GW Pharmaceuticals is a world leader, according to Ultra Corp Capital. So GW Pharma owns a proprietary cannabinoid platform with Epidiolex as its lead product. So it's the world's first company to commercialize a plant-based cannabinoid-derived pharmaceutical. So it stands out as a top pick, according to an analyst with Ultra Corp Capital, who's bullish on the name. But with GW Pharmaceuticals trying to get, I think, $19,000 for the equivalent of the price of an ounce, I just don't see that working out. There's too many holistic individuals who aren't going to take a pill, a pharmaceutical from GW Pharma. And Epidiolex, from my experience, knowing people that have taken it, it makes them lethargic. They don't like it. And so it's not a comparison. And the price plus the lack of enjoyment, if you will, from somebody taking it, nobody wants to sleep their life away. So I don't believe that Epidiolex is going to be something that individuals want to take, nor is it going to be something that insurance companies are going to want to pay for. So they're going to have to figure that one out. Which brings us to number 1 on the list, is that Canopy Growth shuts down two British Columbia facilities, leaving hundreds out of work. So there's going to be 500 people. Their stock price took a hit, almost down 6%, as Canopy Growth tries to say that they don't need these extra greenhouses, they don't need the employees, which doesn't look good for a company like Canopy Growth. They consistently were going up and up and up with all of these deals, and PR essentially wasn't really generating the revenue that they needed, along with all of these other companies, Tilray, Canopy, you name it. Essentially generating the press releases and the publicity, but without the necessary revenue and profits behind that. So the closures have resulted in the elimination of approximately 500 positions. And in addition, the closure in British Columbia, the company says it's no longer planning to open a third greenhouse in Niagara, in Ontario. So definitely pulling back on their expansion opportunities as well as growing. So I think that they also closed down their Latin America operations. So if they're not going to be growing the commodity, maybe they're planning on buying it from somebody else. I don't really know. I don't even think they know. So it just kind of looks like all these companies are trying to figure out how to profit on a commodity without having really thought this through. They all think that, wholesale prices are going to remain at about $1.74 per gram. It's just not the reality. So they're writing down billions of dollars in write-downs, firing their CEOs, and that's just going to be a continuation of the norm until shareholders have no expectations or they reach some kind of profit model. That's going to take a while. You're going to have to come back to the Talking Hedge and find out. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.